Stock investing for beginners. S&P 500 jumped over 2.7% over the past 5 days, especially after Wednesday, and Nasdaq jumped 3.3% over the past 5 days after Wednesday, even at 2 p.m. Look at that. Dow Jones also jumped 2.9% over the past 5 days on Wednesday, especially after 2 p.m. So what happened? Because of the jump, I made over $600 on December 13 in one day, and I made on December 14, Thursday, about $3,000. So over the 2 days period, I made over $3,570 in just 2 days periods. So it must be something special in those 2 days. Today's video, I'm going to talk about 4 stocks going to report earnings next week and how to look at each individual companies to make sure that you choose the best stock possible. And also, I'm going to visit my last week video and I'll talk about 2 stocks and look at the earning result. And we're going to look at last week economic news and also next week economic news, what could come. Okay, Federal result. Last week economic news and also Fed whole rate study indicates 3 cuts coming in 2024. Jerome Powell had a press conference on Wednesday and he said that we're going to hold rates ready and possibly there are 3 cuts coming in 2024. That was better than market expectation of only 1 cut in 2024. Of course, the stock market wanted more than 3 cuts. They wanted 5, 6, but it's still better than expectation. And they're gonna hold the rate between 5.25 to 5.55%. And also, this is the highest level in more than 22 years. The interest rate 11 highs. This is a Fed funds rate, so this is not the same as mortgage rates. Mortgage rates will be higher than Fed funds rates. Fed funds rate is the rate between the banks that they borrow money, they lend the money to each other. That's the rate that Federal Reserve lend out the money to the banks. So what happened last week? Last week, core CPI index came in exactly the same as the forecast, and consumer price index a little bit higher. CPI year over year exactly the same as the media forecast, and also core PPI 0.1%, lower than expected, so which is good. And especially FOMC interest rate decision, Federal Chairman Jerome Powell came out and talked about that. So that was the main market mover last week. Initial jobless claims 202,000, so which is less than the forecast. It doesn't matter, the market responded well, and because everybody is so focused on interest rate cuts, trying to see how many cuts it's going to be, and now everybody is relieved that there will be cuts coming in 2024, so which is pretty good news, and there will be 4 more coming. Lots of investors, they have cash on the sidelines, so they're going to be putting so much money, especially in New Year. After December, January, everybody comes in from holidays. They want to beat the return, the stock markets this year, so they're going to put so much money in to beat the stock market return. Friday, service PMI came out better than expected. Manufacturing PMI came out worse than expected. So next week, we're going to have data on home builder, confidence index, housing starts, building permits, to look at the state of the real estate market in the US. Existing home sales, that's going to be interesting. And jobless claims, the same. GDP, it could be better than expected, or maybe it could be not. And durable goods order, personal income, personal spending, PC index, core PC index, core PC, new home sales. No matter what happens, I think the market's going to look for ways to be bullish. That's what I believe. And we're going to look at last week's stock. Costco reported earnings, so it jumped over the 6% over the past 5 days. like I said before, if you invest in great companies, the past 5 years the stock price has been going up steadily. So it's you not gonna go wrong with that. I mean, it's very rare chance that this company gonna go bankrupt. It has been founded for more than 10 years, has been public company for more than 5 years, and it's going up the stock trend the past 5 years. So it's no surprise that the stock price jump after earnings. If you invest in great companies, the chance of its stock price going up after the earning is much higher. Of course, there's always a chance that it could go lower because of cyclical or any reason. And Costco announced special dividend of $15 if you are a shareholder of record on December 18. Then you could be getting a really good special dividend in January. It's December 28th, so make sure you buy the stock just before Christmas, just to be sure. And also, Costco is selling gold. Look at that. So every time they sell gold online, it just runs out. And lots of people are buying gold because they don't believe in US dollar. And also gold price has been climbing up regularly this year as well. And we're gonna look at DRI restaurant. It went up the past 5 days because it's a restaurant. It's not a technology company, so it did not jump quite a lot. The dividend yield 3.22%, 20.22 PE ratios. And next week, we're gonna have 4 stocks reporting earnings. And let's look at these companies and which stocks are the best. Accenture. This is an Irish American company, IT consulting company, going to report on Tuesday, December 19. Number 1, I like the company. So we're going to look at 5 steps to evaluate the company and the business. Do I like the business? Yes, I like it. I like IT consulting. Has it been in the business for more than 10 years? Look at that. It was founded in 1989. Yes, I like that. It passed my second criteria. And the third criteria is, has it been a public company for more than 5 years? Look at the maxima. You can go to Google and you can look for the stars if you want. If you only know the company name, you can put in the company name Accenture stock. It's gonna give you the same result. Yes, it has been more than 5 years as a public company. How about the past 5 years stock performance? Has it been going up steadily? Yes, it has been going up steadily. So that's a good sign of a great company. And number 5 is we could look at the financial statements. Income statement, balance sheet, cash flow. Has it been going up consistently? If it's yes, then this is a great company that you can think about investing in. And of course, you only want to buy if it's undervalued. You can look at if the stock is undervalued. I'm going to teach more in later, so make sure you subscribe to the channel, and you can go to the playlist to check out more of my videos as well. And the next stock I'm going to talk about is Carnival Cruise, reported on Tuesday, December 19. Have you been on a cruise? Comment down below. I love cruise, especially in the US. Been traveling around the world in Asia. It's probably hard to find a great cruise line going. I'm really part of US. I can eat anything. And I even ate lobster. I can order as many lobster as possible. Like fine dining. Just imagine how good is that. A buffet, you can get buffet. You can even have snacks between meal times. They have magic show. They have swimming pool. They have gym. They have shopping malls, casinos, everything that they want. That's probably the best vacation that you can ever have that money can buy. But as a company, would I buy this business? I don't like this business. Number 1. Why? Because it's a capital intensive business. The ship maintenance costs a lot. The ship costs a lot, and it's also cyclical. If anything happens like in COVID pandemic, it just shut down. And you think you pay money to park at the port. This ship, whenever you park, you need to pay that country, the port, the fees. So it's not free. And if the fuel jumps, then it costs you more. And if labor costs jump, it costs you more. How about entertainment? How about food? Everything, there's so many costs that I cannot control. So that's why I'm not gonna buy cruise ship company. I don't like this business. But if you like this business, yeah, go ahead. Let's look at criteria second. Second criteria, has it been in the business for more than 10 years? Yes, it was founded in 1972. How about the third criteria? Has it been a public company for more than 5 years? Let's look at it. It has been a public company since 1987. Yes. How about number 4? The stock price, the past 5 years, has it been going up consistently? No, it's not going up consistently. It went down. So if you invested $1,000 at the beginning of the past 5 years, you will have lost $600. You will only have $400 right now. So I'm not going to invest it because it did not pass 2 of my criteria. I don't even need to bother looking at financial statement, balance sheets, or cash flow, because I know that if the stock, the past 5 years is not doing well, their balance sheets, the income statement, most likely not doing well. So I don't even have to waste time looking at financial statements. The chance of you or 3% year to date. So if you just bought right here, when it going up, yeah, you could make decent money. But for investing, I'm not gonna invest in Carnival Cruise. If you have any question, put it in the chat below. I'm gonna answer great questions at the end of the video, or maybe in the next video. Stock number 2 is FedEx. As you already know, FedEx is one of the biggest transportations, the logistic company. They transport letters, mailboxes, even the Tom Hanks movies have FedEx. You know, his plane crashed on the island. It's called Castaway. You can go ahead and watch that movies. It's pretty nice, pretty great movie by Tom Hanks. FedEx, in US, there are 2 main transportations and logistic companies. One is FedEx, another one is UPS. So if you look at FedEx, you know the head of the company, the head of the economies of the US. So if you just join live, you can share this video on your Facebook timeline, so you can revisit the video, watch from the beginning to the end. Let's look at 5 criteria. Do I like this business? I'm okay. You know, it's okay not to own this company. How about second criteria? Has it been in the business for more than 10 years? Yes, it has been in the business for more than 10 years. Number 3, has it been a public company for more than 5 years? Yes, it has been a public company for more than 5 years. How about the last 5 years? The stock price, has it been doing really, really well the last 5 years? And it's gonna show going up and down. Look at that. Yeah, it went up, but it's not steady pace, up and down, up and down. I do not like to invest in stock like this as a retirement, because I'm retired. I'm traveling around the world. I don't want to be worried about my stock crashing, you know, anything like that. So I might skip FedEx, but if you like it, you can look at the financial statements, balance sheet, and cash flow statement. And stock number 1 is Nike. Nike is a good brand, and I have Nike. I use it to go to gym. They last a long time, and yeah, not bad. The only thing is the shoelaces can get loose sometimes. Yes, Nike has been having issue this year with inventory, and last year there was a shortage of inventory because of COVID pandemic. They manufacture a lot. Then in 2023 they have inventory issues, so they need to do some discount promotions so that their margin got squeezed a little bit. So that's why their stock is not performing so well this year, only 2.36% year to date. Has it been do I like this business? It's okay. Yeah, I like it better than FedEx. How about their business operations years? Has it been in the business for more than 10 years? Yes, it was founded in 1964. How about public company? Has it been a public company for more than 5 years? Yes. So it passed 3 of my criteria. And number 4, how about the stock price over the past 5 years? Yeah, it's going up, but it's not stable, not so steady. So I might not invest in Nike. So I don't need to look at balance sheet, but it's a cyclical stock, so next year could be better. So I could do some trading. PE ratio is high, but you don't look at PE ratios. PE ratios for beginners make a lot of mistakes looking at PE ratios. If you look at FedEx PE ratios, it's 70.13%, 70.13 PE ratios. But if you look at ACM, it's 31.95. If you think it's much better, cheaper to invest in FedEx, you might be wrong. Look at the past 5 years stock performance. FedEx is only 78.03%, and ACM 150.84%, more than twice the FedEx, because its stock performance is pretty good, because their financial statement is good, their income, their revenue is growing much faster than FedEx. So PE ratio doesn't mean anything, but usually the higher the PE ratio, it means that investors are paying premium on the company growth. They tend to have higher growth, so which is good for the stock performance. So that's the only thing I care about, the stock performance and the fundamentals of the company, the financial statement. Dividend not so much, PE ratio not so much. If you have any questions, comment down below. You can go and look at my other videos in live. If you want to know more about stock, real estate, cryptocurrency, options, you can go to my playlist and check out all my playlists as well. Share, subscribe. I will see you in the next video. Bye bye.